Hello and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. As always, I'll give a little bit of a virus update. We have surpassed 1.5 million infections globally and we are seeing the number very close to 90,000 that have died so far. Now, it's not all bad news around it. We are seeing that there is likely going to be some level of a date put in place for when we might see small businesses allowed to resume, particularly in the UK. Australia is looking at doing something very similar, but it's going to be tentative. We're not sure how this thing goes. Obviously, the progression of the illness comes first, and when we can start to see sort of businesses opening back up. Now, at this stage, I think they're still moving a little bit too fast and ahead of the game, really. We do have other news about Boris Johnson. He is still in ICU with COVID-19, but they report that he is in a stable position. Now, if the absolute worst case scenario does occur, then we are likely to see UK markets have a bit of a hit, but we need to keep an eye on what's going on there and monitor that situation fairly closely, because obviously politically, but also economically, it's going to affect the situation moving ahead with Brexit as well. Now, moving on from all of that, I've been looking at a few different charts about GDP. So the chart I've got up right now is on the IMF, and the part that I'm interested in is actually the curve down that we're seeing now. It is indicating that there is already a global recession occurring. These figures are taken up of all GDPs across the globe, and they are all compiled together. So it is showing that there is a trending down in what the GDP figures are likely to be. The little dotted line they've got on the end, I don't agree with. This is them signifying that there's potentially a V-curved recovery, but the reality of it is that we don't have enough data to prove or give evidence that that is going to be the case. The next piece to support this theory of a recession already taking place is the WTO trade figures. So the World Trade Organization calculates and looks at what all trade across the globe is likely to be, and they record all that data as well when it actually comes in. Now, the blue lines are an optimistic outcome, while the yellow lines are a pessimistic outcome. I believe that the 2021, or the very last lot that you can see that looks like it's going up, is way too early to be telling how it's going to recover, and naturally that is much more than what we've seen in the past several months and of course in the past couple of years. So it's unlikely to see that trade is going to spike that much that fast. Now, what we do see though is that whenever things go down, it happens quite quickly, and their pessimistic scenario is evaluating at somewhere around 30% drop in global trade, perhaps even more, whilst their optimistic scenario is 15% or greater. Now, this also indicates that if you have reduced trade, then you're going to have reduced GDP figures, and therefore you are likely to see economies start to suffer. Further to all of this again, we have a Bloomberg tracker, and Bloomberg have started this tracker tracking global GDP around the globe quite recently. And what they're looking at here is that they're indicating they've looked back at data way back a little bit before the 2008 sort of GFC episode, and they're comparing that data together. So we can see on the far left hand side of the chart here that we do in fact have a drop down, but more importantly we are seeing a pretty significant drop off in the GDP figures on the right hand side over here. The Bloomberg article does read interesting, and it does say that there is likely that we are already in a global recession and that this is likely to continue for a little while to come until we sort of start seeing some more economic recovery signals. But the evidence is coming in now. We are starting to see that data and the figures that we're getting across the globe are linking up and matching with this sort of a theory that we have gone from a health crisis to an economic crisis very quickly. And to put it in perspective, the significant drop that we've had off already is much faster than what we've seen in any crisis before. Now, moving on from this, we also have a bit of news coming out about oil. So supposedly today, Russia has put in place that they are interested in cutting production by 15%, which works out to be about 1.5 billion barrels of oil per day. So that is going to obviously dramatically affect oil prices. We've seen it fluctuate in price a little bit in the last sort of 48 hours, a little bit longer. And I think that we might end up seeing some sort of an agreement reached today, but I can't hold myself to that. We are seeing likelihood that the OPEC and the Plus members are having a meeting, and naturally G20 members have also been invited to attend. So it's really going to be dependent on what Saudi Arabia, Russia and the US all really get together to agree on, for which will see the rest of the OPEC nations sort of start to agree with that. So I think oil is going to be one you're going to watch out for today, especially if you trade it on a regular basis. Now, talking a little bit more about Australia and the Australian economy, Bloomberg have put out an article today about household debt, and I have been reading about household debt for some time and looking at charts about it left, right and centre. Australia has one of the highest levels of household debt compared to disposable income. So they're really only sitting behind Switzerland in that level, which is much, much higher than, what we have here in terms of the amount of housing available. It's quite astronomical as to how bad that situation could be, especially when we're seeing so many people laid off on their jobs. The situation says here, and I'll just read this quote out to you, household debt is almost double disposable income, twice the level of the US, and well over a year's annual output. Now, that is significantly bad. Now, it's fine if you've got a growing economy with people that are able, in a workforce, that are able to consistently make those payments. But the moment you have a housing crisis and then an economic crisis and also a health crisis going on at once, people are naturally not going to be able to work, and there are a lot of people who have already been laid off from jobs. So this puts them in the situation where there is likely they are unable to pay their mortgages, and we are likely going to see a little bit of a bubble in price finally pop its bubble really in the housing side of things, and we might see some pretty bad numbers coming out around that. Now, moving on for the day, the news ahead that I'm seeing that looks good, we've already spoken a little bit about OPEC, so I won't cover too much on that, but I do believe, because it is a meeting that's going to go for all day, it is a tentative sort of thing, there are going to be unscheduled releases. So if you're going to be trading your oil, keep an eye on what the news announcement is going to be. I'd be trying to keep in tune with as much wire information as you possibly can around that. Europe, we have the ECB meeting minutes coming out. Now, this is something not new. We've already had the actual result of that a couple of weeks ago. So this is just the discussions that they were having around that. There might be some new information that might give us a little bit more insight as to what they're thinking, but we'll have to see and have a read of that when it comes out. Usually the after-fact sort of minutes don't have as much impact as what the actual announcement does. In Canada, we're seeing employment change figures coming out. And the big one for tonight is actually US unemployment claims. Now, if you think back the last 2 weeks, the third week of March, we saw a 3.28 million unemployment claims and a massive jump up in the data. Last week, we saw a 6.6 million set of unemployment claims coming in, which is just, blowing everything out of the water. And I feel that today we're probably going to have a similar pattern occurring for the next couple of weeks. And likely, this is very much going to affect what the NFP result is this time round. I think we still got off lightly last time because the data stopped off at about the 12th, 14th of March. But this time round, it's going to encompass pretty much nothing but the bad and the worst situation as it evolves throughout the next couple of weeks. So let's keep an eye on what's happening there. I think that's going to be the big one for you. Now, naturally as well, we are leading into Easter. So tomorrow is Good Friday, and then we've got Easter Monday, obviously on Monday. So this weekend, you'll likely see a number of different exchanges sort of closing for the weekend. We'll have a lot of bank holidays occurring. There won't be too much action going on, but it does mean that you'll likely see a little bit more volatility in the market because you've got less participants actually trading. So if you are going to be trading over the weekend, take it easy, be careful with it. I'd be waiting until Tuesday, which is what I'm going to be doing before I start taking any more positions. But anything that I do have in place now, I'm going to be holding and monitoring very closely to make sure, especially with all the global situations that are going on, that I'm keeping them safe. So if you have any questions about today's video or perhaps some of the other videos I've done in the past, feel free to send me an email at talk2al@acy.com. And of course, like and subscribe to the video so you get more great content from me and ACY Securities in the future. Have a great trading day ahead.